Good morning, class. We are done with all of our four financial statements, no, from week 1 up to now, up to last week. No, ano-ano ulit yung mga financial statements na ating diniscuss. We have the balance sheet, we have the income statement, we also have the statement of changes in equity, and lastly, we have the cash flows. Ngayon naman, ang ating pag-aaralan ay itong tungkol sa analysis. Okay? Siyempre yung mga financial statements na yan ay kapag ka natapos ng isang accountant present sa mga boss, no, sa management, sa may-ari ng business, hindi lang siya babasahin lang ng ganun-ganon. No? Tapos na, hindi lang ganun ang magiging function ng financial statement. Sabi nga natin, these are the language of business, no? Accountancy. So, hindi natatapos doon ang gawain ng accounting, lalo pagdating sa financial statement. So, as I have said, yung ating i-discuss ay ang tungkol sa pag-analyze ng financial statement na nandito na sa ating harapan. Okay? Kagaya ng liquidity, yan, solvency, stability, and profitability. Naririnig na natin yan o hindi man minsan ay madalas, no, sa mga business people, no, lalo sa mga may katungkulan like mga managers, no, lagi nilang mga napag-uusapan ang tungkol diyan. Okay? So dito, let us compute and interpret financial ratios. Okay? Mula doon sa data or information na makikita natin sa bawat financial statement, magkakaroon tayo ngayon ng interpretation o pag-analyze sa pamamagitan ng mga ratio. Business owners are busy with the day-to-day operations of running a business to the extent of ignoring any company financial statement analysis. No? Sabi nga dito, no, yung mga boss, kapag busy sila talaga sa araw-araw na operation ng business, may nakakaligtaan sila. Okay? At ito yung pag-interpret na ng o pag-analyze ng financial statement. In general, an analysis of financial statement is vital for persons running a business because this analysis tells the business owners where they stand in their financial environment. So, analysis of financial statement is the selection. No? Paano raw nag-analyze? May selection, may evaluation, may interpretation of financial statements data, along with other pertinent information to assist in investment, financial decision-making, and to show how and where to improve the performance of the business. So, bakit nag-a-analyze, no? Para daw mag-assist sa investment, okay? Yung mga decision-making regarding sa finance or finances, at saka kung saang part ng business ang dapat i-improve. Yan. Now, the analysis of financial statements is an evaluation of a firm's past financial performance at saka yung prospects for the future. Yung dati at yung inaharap. Ayan, no? So, ang financial statement analysis ay magagamit both internally and externally. Pag internally, ito yung sa mga employees, performance, efficiency ng operations, and credit policies. Okay? Sa external naman, examining potential investments and the creditworthiness of borrowers among other things. Ayan, no? At so yun nga, no? It involves the past and the present and the future. Okay? So anyway, let us proceed. Okay, no? Ang dito sa ating lesson, itong part na ito, kasi more on more on formula. no? Kaya, dalawang part ang ating magiging discussion today at next week para sa financial statement analysis. Okay. So, financial statement analysis is the process of evaluating risks, performance, financial health, and future prospects of a business by subjecting financial statement data to computational and analytical techniques with the objective of making economic decisions. So, 3 kinds of analysis ang ma-encounter natin dito. Meron tayong horizontal analysis, meron tayong vertical analysis, at meron din tayong financial ratios. Okay? So, yung previous lesson natin, yung cash flow, di ba? Yun yung, doon pa lang sa cash flow, nakakapag-analyze na tayo. Di ba? Yung pumasok at lumabas na pera. Ayan. Tapos, dito naman sa extensive analysis, okay? Ang i-discuss muna natin ay ang financial ratios, yung horizontal and vertical. So, next week natin yan tatalakayin. Okay? A financial ratio is composed of a numerator and a denominator. So, ganun lang siya, di ba? We will get back to our business math lessons, di ba? Ratio, tapos proportion, tapos meron tayong percentage. Ayan, no? Babalikan natin yan. Diyan natin ma-encounter ang mga pag-a-analyze ng financial statement. Okay. So, for example, no, it expresses the relationship between a specific financial statement data. Okay? The resulting ratio, ibig sabihin specific, dalawa ang tinutukoy natin dyan, no? The resulting ratio may be interpreted as a percentage, rate, or proportion. So, take for example a company with sales of 1 million and the net income of 100,000. If we take the ratio of net income divided by sales, the result is 10%. Okay, o business math na business math, di ba? Mayroon tayong dinivide na dalawang data. We can understand this as net income is 10% of sales. Okay? Or that net income is 10% of sales. Diba? Doon pa lang malalaman na natin kasi may dinivide tayo eh. Okay. We can also look at it as a rate or proportion. Okay, there are many ratios used in business. These ratios are generally grouped into 3 categories. Ito na, yung mga ratio na sinasabi natin. Profitability, liquidity, at solvency. Okay, so hindi tayo masyadong magtatagal sa portion ng overview. Okay, lalo doon kasi more on formula ito. Okay, halos babanggitin natin yung analysis, overview, yung ratio or yung formula ay I'm sure hindi nyo naman agad-agad masasaulo yan. So, gagawin natin itong aking pinaka-PowerPoint, i-upload ko ito sa class notebook nyo para pwede nyong balik-balikan ng mas madali rather than yung ating video lesson. Okay? So, tingnan natin itong una. Profitability ratio. Measure the ability of the company to generate income from the use of its assets and invested capital as well as control its cost. Ayan, no? Generate income from the use of assets and capital. At saka yung pagkocontrol natin ng mga cost. Okay? A good liquidity position would encourage banks or financial institutions to lend, while bad liquidity position may scare off potential creditors. Okay, no? Profitability ratio, syempre, no, kung kahit ikaw na nagpapautang ka, titingnan mo ang profitability capability ng iyong papautangin. Siyempre, kapag nakita mo ang kanyang financial statement at nakita mo hindi siya kumikita, papautangin mo ba? Di ba? Hindi. So, ganun yan. Okay? Dito sa Profitability Ratio, mayroon tayong ilang mga ratios na saklaw nito. Okay? We have the gross profit ratio. This is the proportion of the gross profit of the company with its net sales. Okay? Gross profit over net sales. Guys, no? Itong mga dinidivide na ito ay makikita talaga natin sa financial statement. So, it may be mixed from balance sheet and income statement or balance sheet to balance sheet, income statement to income statement. Yung horizontal and vertical more on balance sheet to itself and income statement to itself. Okay. Now, profit margin ratio. This ratio measures the proportion between the net income after tax and the net sales of the company. In formula, we have net income as the numerator and the net sales as the denominator. Okay. Dito sa bandang next page, ando na yung summary ng formula natin. Okay? So, tingnan lang natin ito ng mabilisan. Okay? Pangatlo, operating expenses to sales ratio. This ratio can be computed by dividing the operating expenses by the total net sales. And then we have this return on investment. Okay? Ano itong return on investment? Means how much income is generated by the use of total assets. Okay? Sa return of investment, meron tayong return on assets. So therefore, income generated by the use of total assets. Now, yung pangalawa, return on equity. Sabihin, from capital. No? Instead of using the total assets as the denominator, stockholders' equity is used for corporation or capital for sole proprietorship or owner's equity. Okay. Then we have asset turnover ratio. This ratio measures the correlation between the assets owned by the company and the net sales generated by such properties. Okay? So, dito na tayo sa summary tayo sa mga formula naman. Okay? Ang basis natin sa example natin ay ito. Excerpt from the statement of financial position. So, may cash, accounts receivable, inventory, equipment, payables, capital, tapos yung mga total nila. From statement of comprehensive income naman, ang examples natin ay sales, cost of sales, gross profit, operating expenses, operating income, interest expense, at net income. Okay? Guys, kapag kinocompute nyo itong mga ratio na ito, so dapat talaga kapag gumagawa kayo, kaharap nyo ang financial statement. Kasi doon nyo kukuhanin ang data na inyong ino-compute or sinasubstitute doon sa formula. So, ito na example, no, ng formula. So, yung gross profit margin, operating income, net profit margin. So, nakikita nyo guys yung sample computation niya. Okay, so ganoon lang guys, no? Nagdi-divide ka lang. Tapos, yung return on assets, return on equity, lipat natin, i-move natin yung decimal, gawin nating percentage. Okay? So, yan ay makikita nyo na lang, no? Balik-balikan nyo na lang. Kasi, kailangan nyo talagang itong mga formula na ito ay masaulo. Okay? Ngayon, yung una ay profitability ratio. Ngayon, pupunta tayo sa liquidity. This is the capacity of a company to pay its currently maturing obligations. Guys, naririnig natin lagi yung liquid. Is the company liquid? No? Liquidity. Okay. Pagka sinabi natin liquidity, current ang pinag-uusapan natin. Okay? Liquid. Kasi mabilisan. Yan yun, no? Mabilisang conversion. Okay, kaya current ang pinag-usapan natin dito. Current assets, current liabilities. Okay. Under liquidity, meron tayong working capital. It is obtained by subtracting current liabilities from current assets. Meaning, minus lang yan. Current assets minus current liability. Okay, a positive working capital is preferred because it would mean that there are enough current assets to pay all of the current liabilities at the moment. So kapag, sabi rito, no, kapag positive ang result, kasi minus mo positive, mataas yung assets kesa sa liabilities or yung current assets mas mataas kesa sa current liability, ibig sabihin may pangbayad ka sa pinagkakautangan nyo sa ngayon. Ayan. Okay? Kapag negative naman ang resulta, ibig sabihin, di ba, hindi ka makakabayad. O kaya babayaran mo yung iba, meron ka pa rin utang. Ayan. No? Yan yung working capital. Current ratio. Ito naman nakukuha kapag dinivide naman. Okay? Current assets over current liabilities. Kung yung working capital minus, ito ay dinivide. Pero same lang din, current assets at current liabilities ang involved. No? Whole number, current ratio is preferred. For example, a current ratio of 3 would mean that the company has 3 peso worth of current assets for every 1 peso of current liabilities. It means this would be 2 pesos left after payment of the currently maturing obligations. So, yan naman. Then we have acid test ratio. Okay? Kung hindi nyo mabasa, dahil maliliit ang letra, well, i-download, i-save ko itong file na ito sa ating class notebook. No? Acid test ratio, quick assets. Meron sa quick assets, ang tinutukoy natin dito yung cash, receivables, at saka trading securities. Okay? So, sabihin, di-divide mo quick assets over current liabilities. Diba? Hindi kasama rito lahat ng current assets, kundi yun lang tatlo. Cash, receivables, and trading securities. Hindi sinama rito yung inventory at prepaid assets. Okay? Yan, no? Sa computation. A whole number is more preferred. It means that the company has the capability to pay its currently maturing obligations through quick assets. Ayan, no? Kung dun sa current ratio ay positive yan, may pambayad tayo sa ating utang. Ito naman, mas mabilis ang pagbabayad kasi meron tayong basis, yung cash, receivables at trading securities na mas mabilis i-convert, no, sa cash. Kaya, may mabilis na pambayad. Okay, accounts receivable turnover ratio. This ratio measures the frequency of conversion of the company's accounts receivable back to cash. Ibig sabihin, gaano tayo kadalas nakakapaningil ng nagkakautang sa atin. Ibig sabihin, yung collectibles natin. Gaano tayo kadalas makapaningil mula sa collectibles. So, accounts receivable turnover ratio. Paano nakukuha yan? Dividing net credit sales over average accounts receivable. Okay, if the total net credit sales are not available, for most companies, the company could make use of the total net sales. Ayan. And then, we have this average collection period. The average collection period states the usual number of days that it would take before the company would be able to collect a certain group of receivables. Ilang araw daw ang bubunuin, di ba? Para makolekta o bago makolekta yung ating mga collectibles. So, average collection period. Okay. And then we have this inventory turnover ratio. The ratio measures the number of times the company was able to sell its entire inventory to customers during the year. Gaano raw ba kadalas? Ilang beses ang kumpanya ay makakapagbenta ng kabuang inventaryo nito sa customers sa loob ng isang taon. Ayan. So, yan ina-analyze dyan. No? Gano'ng kabilis maubos ang ating inventory. Okay? Average days in inventory. This ratio computes the number of days that it will take before a group of inventories will be entirely sold by the company. Average days of inventory. So, usually, we use 365 days as the numerator. Okay? And we'll make use of the inventory turnover ratio for the denominator. So, yung data makukuha dito sa turnover ratio, inventory turnover ratio, ang gagamitin naman sa average days in inventory. And then we have the number of cycles, number of days in operation cycle. This means this is the measure on how long will it take for the company to transform its inventory back to cash. Okay? Gaano raw katagal na yung ating inventory ay magiging cash? Yan. So, operation. Okay? So, the goal is to always have a shorter number of days in the operating cycle. A shorter number will indicate that the company will have additional cash at an earlier time. Diba? So, ang ideal dito ay mas maikling panahon, maibenta mo na lahat ng iyong inventory. Diba? Kasi kapag sa maikling panahon na ibenta mo agad, makakapag-replenish ka agad ng inventory at maibibenta mo rin agad o magiging cash ulit siya sa lalong madaling panahon. Ayan. So, additional fund siya para sa iyo. Ayan. Kaya ang ano natin dito, ang ideal dito, mas maikling araw. Okay. Again, these are the formulas doon sa ating mga pinag-usapan, no? Working capital, current ratio, asset ratio, receivable. Ayan. Tingnan nyo na lang, guys. Okay? Then we have the solvency ratios. It measures the capability of an entity to pay long-term obligations as they fall due. Okay? Kung yung kanina ay sa liquidity, short-term, or yung mga current, dito naman, long-term naman. Okay. Debt to total assets ratio, as the term implies, this is just the proportion between the total liabilities of the company with its total assets. Ibig sabihin, total, kasama na dyan ang current at kasama dyan ang long-term. Okay, the debt ratio shows how much of the assets of the company were given by creditors. Okay? Doon daw sa kabuang asset ng kumpanya, ilan daw doon or gaano karami doon ang galing sa creditors o sa third party creditors or sa pangungutang. Utang yan eh. Yan. As much as possible, current and prospective creditors would want a very low debt to total assets ratio. There is a bigger probability of collection in the future if there are fewer liabilities to pay. Yeah. And then we have this debt to equity ratio. So dito naman, instead of assets, the debt to equity ratio compares the liabilities of the company with its equity. Okay, a small debt to equity ratio would indicate healthier solvency position for the company. Then, lastly, we have the times interest ratio. Shows the proportion between the earnings before interest and taxes of the company and its interest expenses. So, dito guys, no, ito pa rin yung formula niya at nagbigay ng sample computation. Now, bago tayo magpatuloy, ito muna ang ating question of the week. What is the difference if you will subtract current liabilities from current assets? Letter A, accounts receivable turnover. Letter B, asset test. Letter C, current. And letter D, working capital. So, yung sagot nyo ay i-comment ninyo. Now, ito susunod natin guys, ito pa rin naman yung unang pinag-usapan natin. Sila pa rin, mga ratio, profitability, solvency, liquidity, ayan, analysis. Ngayon, ang meron lang dito ay yung comparison. Halimbawa, 2018 at 2019, kung magkaiba yung naging finding sa kanila under same formula, ano ang much better? Yung year ba na ito o itong year na ito? So, ito yung makikita natin dito sa ating susunod na mga slides. Okay? Comparison. Ayan. So, example ito, ayan, no? Yung balance sheet. We have the assets, at saka we have the liabilities, at we have the equity for 2018 at 2019. Compare sila using the same formula. Okay? Sabi ko nga, to determine which gives the better result. Okay? By analysis. Ayan, working capital. Okay? Paano na nga ba yung working capital, di ba? Current assets minus current liabilities. Okay? Yun yung formula niya. Okay, mula dito sa 2018 at 2019, okay, nakuha natin ang working capital na 960 million, 960,000 sa 2018, tapos yung 2019 ay 1 million mahigit. Ano ang analysis dyan? For both periods, the company has a positive working capital. This is something good. However, comparing the two periods, we can conclude that GSM company is in a better liquidity position in the year 2019 than in 2018. So, mas malaki ang working capital ng 2019. So, it is better than in 2018. Diba? Current ratio. Current ratio, dinivide. Imbes na minus, dinivide naman. Okay? 3.13 ng 2018, 3.02 ng 2019. Ano ang analysis dyan? GSM company has 3.13 worth of current assets for every 1 peso current liability. Okay? For the year 2018. This is something positive. This is something positive. However, comparing the two periods, the company has a slightly better current ratio in 2018 than in 2019. Kasi mas mataas yung 2018. Okay? And number 3, asset test ratio. So, sa asset test ratio, yung formula, quick assets divided by current liabilities. Okay, 2018, 2019, 2.04 versus 1.82. Ano ang mas better? Okay, the company has 2.04 worth of quick assets for every 1 peso of current liability for year 2018. It means that it really has the capability to pay its maturing obligations through its quick assets. Comparing both years, however, would reveal that the company was better off in 2018 than in 2019. Mas mababa kasi ang 2019. Okay, accounts receivable turnover. Paano ang formula niya? Accounts receivable turnover ratio is equals to net sales over accounts receivable. Ang nakuha natin sa 2018, 16.66, 2019, 17.57. Analysis. Comparing the compound accounts receivable turnover ratios for 2 years, it can be seen that the company has a higher ratio for 2019 that can be attributed for a better performance from its collection department. Okay? It measures how many times the company collected its accounts receivable from its customers. Gaano raw tayo kadalas nakaka-kolekta. So, 2019 is better. Average collection period. It states the usual number of days it would take before the company would be able to collect a certain group of receivables. Okay, dun sa example natin, 2018-2019. Number of days divided by the number of accounts. Okay? Ang formula dito ay 365 days over accounts receivable turnover ratio. So, ang basis dito yung nauna natin ay ito, yung sa accounts receivable turnover ratio. Therefore, 16.66 ng 2018, 17.57 naman ang 2019. Which is better, 2018 or 2019? Okay, yung 2018, 21.91 days. 2019, 20.77 days. Ito yung analysis niya. A shorter average collection period in 2019 shows that the collection department increased its effort to collect company receivables as they fall due. It can be seen in our computation that the company has a better accounts receivable turnover ratio and average collection period in 2019 than in 2018. Kasi sa madaling panahon, mas nakakolekta sila ng maganda. Okay, ng mas malaki. A shorter average collection period means that the company has more immediate cash that can be used in its operation. No? A short span of days lang, no? Ay mas nakakolekta sila ng cash. Okay? Kaysa dun sa 2018 na ang inabot ay 21 days, no? Malit lang naman ang diferensya. Inventory turnover ratio. This ratio measures the number of times the company was able to sell its entirety of inventory to customers during the year. Okay. Tulad nitong 2018-2019, 2.38 times versus 2.76 times. So, mas maikli yung, mas maliit yung 2018. Analysis, it can be seen in our computation that the inventory slightly increased in 2019. It means that the sales department sold more products to customers in 2019. Okay? So, mas maganda yung resulta ng 2019. Average days in inventory. Okay? Ginamit natin ang 365 days. Sabi, average days in inventory, 153.36 days noong 2018. 132.25 days noong 2019. This means that the company will take 153 days to sell its entire inventory. Yun yung 2018, no? Pero noong 2019, mas maikli. 132 days lang nabenta na lahat ng kanilang inventory. So, mas maganda yung performance nila ng 2019 kesa sa 2018. Okay, number 8, number of days in operating cycle. Tingnan natin to. Okay, 2018-2019. We have 175 days sa 2018 and 153 days in 2019. A comparison between the two periods shows an improvement of at least 22 days in the operating cycle. Okay, it means that the company involved as a whole when it comes, improved as a whole when it comes to selling their products and collecting their receivables. Ayan, di ba? Now, let's proceed with solvency ratios. Okay, debt to total assets ratio. Okay, ang analysis natin dito sa 2018, ang ginawa natin dito, total liabilities divided by total assets. Solvency ratios, ibig sabihin long-term to. No? Debt to total assets ratio. So, 2018, 0.69, 0.68 sa 2019. 0.01 lang. Okay? Comparing the data for the 2 years involved, it can be seen that there is a minimal change in debt ratio of the company. This means that in 2018, out of the total assets of the company, 69% was being financed by creditors. Okay, a high debt ratio implies a high level of debt. Ayan, 69% daw out of the total assets, no? Ang liabilities ay 69% galing sa creditor ng 2018 at noong 2019 naman 68%. So debt to equity ratio 2.28 versus 2.17. Ano analysis natin diyan? Comparing the debt to equity ratio of the company for 2 periods concerned showed that the company was more solvent in 2019 than in 2018. A high ratio suggests a high level of debt. Mas malaki daw ang pagkakautang kapag mas malaki yung figure. It may result in high interest expense. Kapag mas malaki ang utang, mas malaki ang interest expense. Number 3, times interest earned ratio. Okay, 2018, we have, ang formula dito, gross profit ratio is equals to gross profit over net sales. So, 10.66 ng 2018, 2.33 ng 2019. Analysis, comparing the times interest earned ratio of the company for 2 periods, it can be seen that the company is very solvent in the year 2018. Mas marami silang pambayad. It is 10 times more solvent to pay the interest with its income before tax. Okay? Kasi bigla kita nyo, taas ng interest expense lang ng 2019. Million din. As against dun sa 300,000. The profitability ratios, gross profit ratio, tingnan natin ang formula. Gross profit ratio is equals to gross profit over net sales. So, ang gross profit ng 2018, 80%. 77% naman sa 2019. This means that for every 1 peso the company sells, 0.80 goes to the gross profit of the year 2018. The company's gross profit ratio slightly decreased in 2019. This should be avoided or at least be minimized. The gross profit ratio can be improved by continuously finding inventories with lower cost without sacrificing quantities. Okay, profit margin ratio. Net income after tax divided by net sales. Yun yung gross profit. Margin ratio, 47% ng 2018. In 2019 naman, 34.48%. So, analysis natin. This means that the company earned 47 cents for every 1 peso of sales in the year 2018. The company's gross margin ratio shows a decline for the year 2019 kasi naging 34% na lang. Operating expenses to sales ratio, 2018, 16%, and then 2019, 5.17%. Comparing the data for 2 years involved shows that there is a huge improvement in the operating expenses to sales ratio. This can be attributed to lower operating expenses and increase in net sales. Operating expense to sales ratio. Guys, tandaan nyo rito sa operating expense. Operating expense, dinivide natin sa net sales. Actually, ito rin yung makikita natin sa vertical analysis. Okay? So, 16% to 5.17. Okay, bumaba ang operating expense to sales ratio ng 2019. Okay, so improvement yun. Return on assets. Before profits can be realized, certain investments should be made. In this case, assets will be used for the different projects of the company. Your goal is to generate profit based on the available assets during the year. Thus, the company aims a higher return on assets. Return on assets 2018 and 2019 from 1.02 naging 0.74 na lang. Ibig sabihin, bumaba ang iyong return on assets ng 2019. Comparing the data for 2 years involved shows that in 2018, the return on assets is very high compared to the year 2019. This can be attributed to a much higher income compared to the assets of the company. And then return on equity naman, ito naman ay sa capital. 3.36 ng 2018, 2.35 ng 2019. In 2019, the return on equity decreased. This could be attributed to a lower net income after tax and larger owner's equity. So, bumaba ang return on equity. O kasi, bakit? Mababa raw kasi ang naging net income after tax mo. Okay. Bumaba ang kita. Asset turnover ratio. This ratio measures the correlation between the assets owned by the company and the net sales generated by such properties. Okay, 2018, 2.17, 2.15 ng 2019. Ang analysis, the assets turnover ratio slightly decreased in 2019. This is something not good because the company should aim for a higher asset turnover ratio. This can be attributed to bigger net sales generated for that year. Understanding on the importance of computing and interpreting financial ratios in the business. Sabi ano ba ang importansya nitong mga ratio na ito? Itong mga analysis nito. Okay? Managing a company, organization, or enterprise can be challenging task. Along with the day-to-day activities of running a company, it is vital to evaluate performance on a regular basis to ensure success. Analyzing the financial and operational condition of the organization to understand strengths and weaknesses helps leadership determine where improvements or changes can be made. So, sa pamamagitan ng pagka-analyze na ito, nakikita agad natin saan ang flaws, saan dapat baguhin, okay? Sa mabilis o sa maagang paraan, sa maagang panahon, pwede na agad mag-improve. The good news is that company performance information can easily be gleaned through financial ratios. Okay. Now, financial ratios are important tools for quantitative analysis. Okay? So, anyway, guys, by just merely discussing, reading ng konti, hindi agad-agad talaga natin mag-gets yan. Kailangan talagang inuulit-ulit natin yung binibisita natin, guys, yung formula at yung pag-iintindi doon sa isang senaryo o yung tinatawag nating situation analysis. Okay? Kaya sa inyo, guys, usually ginagawa ito ng mga managers. Itong pagdating sa analysis, ginagawa ito ng top level rank. Okay? Yung mga manager, executives, board of directors, yan. Okay? So, hanggang dito na lang guys yung ating lesson. I hope na mas mapag-aralan nyo pa itong maigi para mas madali maintindihan ninyo ang mga ginagawang pag-aanalisa sa ating financial statement. Okay? Next week ay dun tayo sa vertical and horizontal analysis ng financial statements. So, until here guys, good morning, have a nice day.